Reliance Capital is up about 1%. It was up 4% on Tuesday as well. Nippon, the Japanese company, has hiked its stake in Reliance Life from 26% to 49%, valuing the insurance arm at about 10,000 odd crores. The management is now joining us. Sam Ghosh, CEO at Reliance Capital, is now with us. Sam, thank you so much for taking out time for us. First, if you could explain the deal, what will be the cash flow, what will be the timeline for this deal, and what essentially has happened at Reliance Life?
Has decided to increase its stake in Reliance Life Insurance from 26% to 49%. They valued the entire company at about over 10,000 crores. The transaction value for 23% is nearly 2,265 crores. This is purely a secondary transaction in that Reliance Life Insurance's capital adequacy is at about 370%, so they don't need capital to grow the business. So the proceeds from this stake sale will go to Reliance Capital itself. This, if you look at it in terms of embedded value multiple, this is over three times EV multiple, which makes it one of the best deals in the market. And so we are very pleased that we've got Nippon Life as a partner going up to 49%. Obviously, this is subject to necessary regulatory approvals. In terms of board composition, also Nippon Life will now have more seats on the board, as well as they'll obviously deploy some more people in the company. The company has already 4 or 5 people from Nippon Life. We expect they'll add another couple of people there.
So what is the timeline for this deal? When are you expected to get this 2,200 crores? And what are the various approvals that we need before this deal gets completed?
Sure. What will happen is now we've signed the definitive documents today. We'll have to get CCI approval, FIPB approval, and IRDA approval. So those are 3 things that will follow. We expect completion before 31st March 2016.
So as you said that this is not a fresh issue in terms of capital raising, capital or the money that comes in will go to Reliance Capital. What is the strategy there? In which business would be utilized this 2,200 crores?
Yes, see, if you look at Nippon Life, obviously has also taken a stake in our asset management business. They were at 35%, they're going up to 49%, which we announced in October. Nearly 1,100 crores will come in. So overall, I think Nippon Life would have invested for both these transactions at over 8,600 crores, which is a substantial amount of money. In terms of business relations, obviously, Nippon Life has more or less equal say both in the asset management and the life insurance running of the business, and they're helping us grow that. In the life insurance business, for instance, we have now copied a number of the processes and the distribution methodologies of Nippon Life. So Nippon Life has a huge direct sales team, which is a paid agency team, which we are now following. We have about 50 of our branches following that process, and we'll add about another 150 branches to that. In terms of our asset management business, we have a Japan-India fund, which is nearly over $1 billion now, and will continue to grow. So a lot of Japanese investors are investing in India. Also, we have an India-Japan fund in Japan, whereby if Indian investors want to invest in Japan, they have the opportunity to do so. So there's a lot of collaboration in these 2 areas. Plus, we obviously expect further collaboration because we are now more or less equal partners. So in these 2 businesses, obviously, we'll continue to have substantial collaboration. Obviously, these are 2 core businesses of Nippon Life. And we would obviously look at other areas of collaboration as and when opportunities arise.
So as far as housing finance business is concerned, you've always maintained in the last 3 quarters that has been the growth area. Does that continue to be in the sweet spot? Do we see continued growth in the housing finance business?
Yes, I think that is a core growth area for us. If you look at last quarter results, profits were up about 65%, ROE is at about 20%. And we would like to grow that business because with that sort of ROEs, 20+% ROEs, and we feel that once you have scale, we can hit ROEs of over 24%. And the opportunity, as I said earlier, in the affordable housing space is significant, though you may find that in the larger cities, the higher ticket housing, there's a bit of stress. But if you look at it in the smaller towns, the opportunity is significant, and there's huge requirements also. So we feel there's huge opportunity for us to grow that business.
So just talking about deals in the insurance space, we've seen a lot of foreign players coming out, hiking the stake that they already have, also some new deals coming in. Do you see such high amount of investment in insurance continue?
No, I think what is happening is in the case of some of the bigger companies, they are well capitalized, so the capital requirements are not so significant. So therefore, most of the proceeds are going to the promoters. of these insurance companies. However, what is going to happen is the FDI inflow into India is obviously substantial, which helps India's growth story. And secondly, I think with the commitment of the foreign partners, the business will obviously grow at a much faster rate because both partners now have more or less an equal say in the business. And obviously, we would expect the foreign partners bringing in technical skills to help grow the business.
So individual premiums are declining. Numbers in terms of growth rate for some of the insurance companies are looking in on the slower side. Why do you think such high investments is coming in a sector which is slowing down?
No, I think if you look at it, first of all, in India, overall, insurance is underpenetrated. So customers don't have adequate insurance or they don't have any insurance. So the adequacy of insurance has to grow. And so we expect that future growth rates will be there. However, what's happened in the short term is that because of regulatory changes, etc., margins have been squeezed, and therefore, and also in the past, we had a large influx of unit-linked business whereby customers didn't make so much money. So therefore, there was a reluctance towards insurance. However, insurance requirements always be there. For us, for instance, in Reliance Life Insurance, we focus on traditional products, mainly non-participating products. So therefore, what is good for the customer, because you're giving them a holistic type support in that there's not only the taking care of the risk side, whereby if there's a death in the family, you're covering that. However, also you're giving them some investment returns, and also it obviously gives you also tax shelter. So you're giving them a holistic sort of composite product as opposed to purely looking at purely an investment type product.
Right, sir. Thank you so much for taking out time for us, and congratulations on the big deal in the insurance arm. Reliance Capital, the name is up about 1.5% big fund infusion of 2,200 crores into the company. We're taking a break, coming back into